Well, let's talk now to Vicky Pryce, the international economist. Welcome back to the programme, Vicky. So, looking at this IMF report, growth should be higher than forecast this year, but the outlook is dim. So, do you regard this as good news or bad news?
The interesting thing is that this year has proved slightly better, and the main reason it's proved slightly better is because of the tariffs in a peculiar way. Because everyone was expecting the tariff announcements in the US, everyone exported from across the world, whether you look at Europe, China, what the UK has done as well, in order to beat the tariffs. And that's what's been going on. So the first half was impacted by that of 2025, with the result that the IMF and everyone else who's looked at the forecast for this year has upgraded the expectations for 2025. But of course, since then, we've seen quite a slowdown taking place. And that slowdown is really because this tariff uncertainty is still there, and the IMF is making a big deal about this prolonged uncertainty, which they think is, if it remains the case, that we still haven't got a clear road ahead on the tariff side, it will be affecting growth, as you rightly suggested, for the next couple of years.
So tariffs, obviously one big issue raised by the IMF. They also talked about this possibility of an AI bubble that could burst. Do you think we could see a damaging correction over that?
Well, the extraordinary thing is that everyone is now talking about this. So the more you talk about it, the more perhaps, people will think that perhaps it is going to happen, and it is around the corner. But the worry has been that a lot of what we've seen recently in terms of the funding, raising of funds, buying into each other's companies and so on, has been concentrated in a few big firms which are involved with each other, if you like, both as suppliers and also as taking stakes in those other companies that are also supplying them, and a lot of investment is going to be needed in these areas. That investment, of course, is going to be costly. Interest rates remain high. If a lot of debt is used for it, then something goes wrong along the line. What you might find is indeed that the whole thing collapses. I think those are the worries. We see that affect markets every now and then, but for the moment, I think in this area they remain relatively bullish.
So we've got this dim outlook as described by the IMF. Is there anything that you could see coming that could turn that around?
Well, yes, a little bit more stability would be rather good. And of course, one big area that the IMF is covering is interest rates. We've seen, of course, bond yields being quite high in the US, and their own interest rates also staying high in terms of short-term rates by the Fed. We've seen that happen also in places like the UK. What they are stressing is that if there is a question of inflation, the interest rates perhaps need to stay high, and that's a problem. But where you can bring interest rates down, then they think it's possible. And they are highlighting that quite a lot of emerging countries are able to do more in terms of their own policies for the central banks. And also, of course, if you look at what may be happening in other parts of the world, you still have the likes of China sort of growing, just under 5% in their forecast. You have quite a lot of the emerging world still doing well. And I think that's good news. So it means that they have managed somehow or other, and I think the IMF is stressing that, be able to carry on despite all those uncertainties that are out there, which is good news in terms of giving us a bit of comfort, if you like, for the future.
Vicky, great to talk to you as always. Thanks so much for coming on the programme. Vicky Pryce, the international economist.